So again, good afternoon, everyone. Welcome, welcome. Nice to see you all. It's time for the Monday webinar. I'm Jared Johnson. I am just in the sake of full disclosure. These are my trade ideas. These are things I'm going to be doing this week. Sometimes I don't do them honestly because I just surely miss the things that I've mentioned, and people that were in participation of these Monday webinars make money on trades that I was hoping on doing and then I never ended up doing that went perfectly great. But remember, trading is risky and you got to do it in a pretty careful manner. It's always a good idea. Okie dokie. So I'm going to try not to sound too scattered today, but I'm honestly going to sound incredibly scattered, and it's not because of lack of preparation, but it's because there's so much to talk about in so many areas. And I don't know if you guys that have been with me for a long time remember, but focus is one of my, let's just say it's something I got to work on. So being a good storyteller is helpful in trading, and I don't know that I'm a good storyteller, so I'll do my best here. So first off, as a reminder for anybody that is not in the trade group, you can get a free trial at this link, or you can go to daytradersfx.com/join, and you can get a free week to the live trade group. And you can jump in here, see what we're doing, see what we're up to, see how everything's going, so on and so forth. We'd love to have you. I always mention this on Monday because it gives you the entire week to have a free trial with us. So you get the whole week, and then you can, cancel at the end of the week if you hate my guts, or stay with us, or whatever. But that way you get a full week of seeing how everything really goes. So you can do that at daytradersfx.com/join. We'd love to have you. This is just a little quick look at the weekly calendar. And as you can see, we have about 11 billion news announcements this week. So I'm not even going to hardly talk about any of them because we have so much stuff every single stinking day. We've had two kind of quiet weeks of news, but now we've got just tons of stuff. So Monday we've seen some big deals, and we're going to polish that off with some interest rate announcements from Australia at 9:30 p.m. tonight. We're gonna kind of casually watch that. I'll be around. I don't know if I'm gonna make it necessarily a live session because central banks. We're gonna talk a little bit more about the central bank stuff. It's getting a little bit crazy. So that's coming up tonight in about 4 or 5 hours, I guess, from now. And I'll be around the chat. We'll be watching this, and I'll be sending out some trade ideas to subscribers after the Australian news, depending on how things look. Thing number one. We have lots of news on Tuesday, lots of news on Wednesday, lots of news on Thursday. As you can see, there's a bit of a theme of lots of news. Then we polished the week off with U.S. and Canadian employment numbers, which is also pretty crazy. So we're going to be watching all of that. There's just a ton of news this week, so that's a good thing to know. We've seen incredible amounts of volatility over the last 7 to 10 days, probably 10 days, I guess you could say. Meaning we've seen huge swings. The markets have been up and down and up and down and just massive movements, which I think personally is so exciting. And it's a great, great, great opportunity. Number one, if you have a broker that allows you to hedge, some do and some do not, I have a little tool right here, and it's called the Trade Manager. And you can go to this link right there, and you get to it by going to my website, going to the blog, and just go to downloads and links, and it's under Trade Manager. And just watch the video with, this will explain what the Trade Manager is, but one of its fantastic features is being able to hedge out of losing positions. It's not something that works great all the time. I'll be honest, it's not great in choppy markets. In choppy markets, I mean kind of that typical summer, things are bouncing around on a 50 or 100 pip channel for days and days and days. It's not great in that kind of a situation, but it is great in highly volatile markets that have 100 plus pips move up and down in a given day, which I think we're going to see a lot of throughout this week. So it's a great tool for that. You can see how it works and all the details and all the benefits it has by just going to that link I posted right there, Day Traders FX, and again, just go right here to this links and download. Or downloads and links, excuse me, and go to the Trade Manager. The webinar will talk more about it. It's a great little tool. You can buy one right here. It's not very much money, a couple of bucks, and it's just a great little tool for trading, and it's going to be fantastic this week. I used it a ton last week, and it was awesome. For anybody that is able to hedge with their broker, there's a U.S. broker that allows some hedging features. A lot of international people that can do hedging as well. It's a great, great tool for markets that are swinging a lot. So we're going to be using the heck out of this week. Pretty much every trade I take is going to be a trade manager type trade, and I'll mention that in the group. Of course, we'll have options for those that can't hedge and don't have the trade manager and so on, but you'll just have extra benefit by having the trade manager on for these given trades. So it's going to be really exciting. It'll be fun to use. There's going to be lots of things happening. Okay, that's a mouthful. Let's start off with the fact of, or the idea of what in the world do we think is going to happen with the markets this week. Here's a couple of things that we can take away from what we've seen. First of all, we've seen China has just caused a whole bunch of ruckus. China's gone through a lot of intense growth with very little correction, and they just don't really know necessarily what they're doing when it comes to this kind of stuff. China's become a global player fairly recently. In the last, 20 years, I guess they've become a really big global trading partner and a global player in the big economy. And so that being the case, they're fairly inexperienced in kind of managing these whole movements and corrections and interventions and currency devaluations and all of that stuff. And we've seen that definitely play out this week. I've watched this happen over and over again, and it's been interesting reading some of these articles about how these things were communicated versus how we've seen Europe and the UK and the US and some of these other countries communicate intervention. China did a bit of a bad job at it, and we saw lots of wild swings and lots of volatility come into a lot of different markets from what happened in China. So that's been wild and crazy. We've seen that despite some of the biggest analysts out there, people that I think are really smart and really successful and trade billions and billions of dollars, that say the Fed is not going to raise rates, they can't raise rates. And then we have the Fed saying, yes, we can, and yes, we will. And to the point where one guy that I just think is great, he's kind of the, I guess you could say he's someone to follow for lack of imagination, but he's a really smart investor, and he happens to have the largest hedge fund in the world. Ray Dalio, he said that I forget how exactly he stated it, but he said the Fed can't raise rates before intervening. He's saying the Fed's going to start easing. We're going to start another QE, and then he came out and said, well, they might raise rates a quarter to a half a point before starting some QE stuff. And so everyone's just upside down and on their heads about what the Fed's going to do. And the Fed's just pretty clearly saying, we're going to raise rates, but nobody believes them. Nobody believes them at all. And I don't even know if the market believes them. So that's going to be interesting. So the Fed has basically, central banks have basically just been throwing curveballs all over the place, and nobody knows what to expect or what to think. So we've seen that happen quite a bit. It's been a wild and crazy summer, and it's been polished off with all of this up and down volatility. We've seen correlations. One thing that I look at that is kind of always throws me off a little bit. I'm heavy into correlations. I'm heavy into what is the dollar yen doing in relation to the stock market? What is the Canadian dollar doing in relation to oil? What is the US dollar doing in relation to gold and the US stock market? And those are all fairly tightly correlated things, which we have seen not be very tightly correlated over the last couple of weeks of all this big movement. We've seen the dollar Canadian just kind of stay in its area here. The dollar CAD I watched quite a bit with oil. And it hasn't really done that much through the entire month of August, where oil has dropped like crazy, and then oil, rallied like crazy today, like $10. Oil's up $10 today, which is huge, huge, huge. That's like 25%. So it's up a big amount, because we saw oil down at about 38, and I think it closed today. What did we have oil close at today? Let's just look at this guy real quick here. I think oil's so here we have oil at about 47. It was up in the 48 area, but oil's gone crazy. Just a lot of things have happened. Anyways, correlations have been kind of messed up. The dollar has been rallying when the stock market is also rallying, and the dollar has been dropping when the stock market is dropping, and those typically go opposite of each other. Gold's been doing its own thing. There's just been a lot of, I guess, decoupling of the correlations, and so correlations for me are really important. They really help me stay in the direction of the market. And it's tricky to trade without those correlations. So we've seen that kind of be challenging the last couple of weeks. So just a lot of things, but the good thing is I think we're just going to see some good old crazy volatility. And again, with my trade manager program, volatility can be a very, very good thing. And with some of the trades we're looking at, volatility can be a really, really good thing. So we're going to be ready for all of that, and we're just going to really try our best to see where some of these currency pairs are going to go. I sent this chart out earlier today, actually, and this is the dollar index. Can everyone see that dollar index chart okay? Everything coming through loud and clear on the dollar index. This chart is very interesting because, all right, good, excellent. Because the dollar index is heavily weighted towards the euro, first of all. The DXY is like 50% euro or something, and then it's 50%, pound and Aussie and Canadian dollar and New Zealand dollar and yen and all that stuff. But it's a huge portion euro, so it's not a huge surprise that we're seeing what we're seeing here. But this is a weekly chart, and you can see that the dollar index made a major stab at this low of May. So here's our May's low. We have this big run down. We have this huge bullish engulfing candle, and it runs back up, and then that kind of fails out and whatever. Then we have another big stab at it right here last week, the dollar index. It dips down and it hits that support and it pushes a little bit through, and then we get this huge hammer. We have this big reversal candle. Some people don't care about reversal candles. Some people don't look at reversal candles. Some people don't even know what reversal candles are or candlestick anything. And all of that is totally great. And I'll just sum it up real quick in two little words. Big deal. This is a pretty big deal right here. This is a weekly chart. I really don't care about reversal candles or any kind of candlestick anything when it's on a 4-hour or 1 hour or 15-minute or anything like that. The smaller the time frame, the less I care about it. The larger the time frame, the more I care about it. Daily chart candlesticks are pretty important. Weekly chart candlesticks are like really important. And so we have this huge reversal, this hammer on our weekly chart, which means that the sellers were taking the dollar down and they just couldn't hold on to it, and the buyers jumped in and the sellers were stopped out, and all of that explanation you hear on candlestick theory stuff. Anyways, a nice solid close above this support level, above that May low, not making any new lows for the summer. It did peak down for a minute there, but huge rejection off of that. And that tells us that there's big buying interest for the dollar still. And we top all of that off with the fact that if we look at the euro dollar on the weekly chart, we have the exact same picture just in the opposite direction. Euro dollar looked like it was headed for the moon. It was just the euro dollar is headed straight up, and it ran up to about 11700, and then just big time reversal. This is a 300 and about 25 or 30 pip wick on the candlestick here, and then this huge body right here, or as I like to say, this is a plus size candlestick, not to offend any potentials, but this is just a big body and an even bigger wick on this candlestick, and huge reversal right here. So I'm a little torn because one thing that I look at is when 23% fib levels really go, 38% fib levels almost always get hit. And we had a big stab at almost getting to that 38% fib on this euro dollar. And then we get this huge weekly reversal candlestick. And the same thing on the dollar index here. We had a similar Fibonacci pattern right here, and it made this dip down, and it's given us this massive reversal candlestick. So what that tells us, at least last week, that the dollar bears, the US dollar bears, made a huge run at the dollar. Just a big, bad, gnarly run at the dollar. And they got shut down something fierce, like majorly shut down. So what that means going into some of these dollar pairs is I'm looking for opportunities to short the euro dollar. There's a lot of interesting levels in here that are going to tell us a lot of interesting things. But basically, I'm just trying to short the euro dollar at this point. I think this is going to be a good, fantastic short to take it back down into the 110 area and probably below. And I don't know what it's going to do after that, honestly. I'm just looking for a couple hundred pips short, and then we'll see where it goes after that. With euro dollar, this level right here, some of these highs where we made that big stab up above and then we couldn't really hold on to it. For me, probably 11400, 11450 is going to be that point that I get bullish euro dollar again. Somewhere between 11400 and 11450, I'll be bullish euro dollar. Below 11400 or 11450, I'm going to be pretty bearish euro dollar. And I'm going to look for this thing to pull back 50, 75 pips, somewhere around there, get a little bit closer up into that 11300. And then I'm going to start shorting euro dollar down to 110 and potentially down to 108. 108 is our big giving point. If we break 10800 on euro dollar, parity is, to say the very least, the next stop, if not more. But that's still a little ways away. Our first target should be about 110 and then 108 after that. But somewhere around 11300, I think I like shorting euro dollar. Again, if it starts getting back above 11400, 11450, then I'm going to jump out of any of that. And I'll have the trade manager, and hopefully I'll be able to get out with some pretty nice profit. But that's what I'm going to be looking for on this euro dollar this week. I see that big reversal candle on the dollar index, and it just makes me want to be long US dollar against most of these pairs after a little bit of pullback. So that's what I'm looking for on euro dollar. Pound dollar is very much the same. We talked about the pound dollar a good little bit last week. I think we took a trade on the pound dollar and ended up trying to buy some dip here and ended up closing with a pretty small loss. And then it just tanked. And remember, we talked about the fact that 154.50 was our breaking point. Pound dollar is massively bearish below 154.50. Well, it's 100 pips below 154.50, and it's just bouncing around at this little double bottom here, which is about 153.50. I think this is a great area to watch as well. We start breaking below 153.50, and I'm a huge fan of shorting pound dollar even further. We've got a pretty good looking bear flag right here, and a break of 153.50 looks excellent for me, and I'll just sell the pound dollar like crazy. However, I would like to see the pound dollar get back up to around 154.50 to even 155.00 before I short. Up there, I think we can see some pretty exciting things happening. Just back up around this resistance level. I think this is going to be a good area to enter short pound dollar, 153.50. And I'm going to keep a pretty tight leash on it because when it retraces back up into that, it's still keeping us in this multi-month channel right here, which we've got to be pretty careful of these channels. But I think there's going to be some good opportunity to short a bit of a pullback on this pound dollar and hopefully take it through 153.50 down into the 150 area and some of these missed pivots right here. So that's what I'm looking for on euro dollar and pound dollar. We'll go back to that euro dollar in a second. Look at that rising channel on the daily chart, and we'll talk about that. I just want to run through these guys real quick here. Remember to watch pairs that are in channels. So again, we've got a lot of different things as far as commodities and correlated pairs go, and the New Zealand dollar has gotten decently hammered through the month of August. Not horribly, but it's down a couple hundred pips. But it's now in the middle of about a 4 or 5 month channel right here. So watch this big channel here. We're right in the middle of it. Any pullbacks to that upper part of that channel, getting into the 72.50 kind of region right there should be pretty exciting and maybe give us a nice opportunity to short it. And so we're going to keep an eye on that. I think there's going to be some good opportunities there, but I'm not super gung-ho about New Zealand or Aussie dollar just yet. But if it does give us a pullback to that channel resistance, I'll be looking for some opportunities to get in there and take that puppy down. Dollar CAD. We've been talking about the dollar Canadian quite a bit, and this has been, oil has just been tanking and tanking and tanking, and it's pretty tough to say, yes, I think it's a really good idea to start buying the Canadian dollar while oil is just getting smashed. That's a hard thing to say while sober. Um, but we have seen that my indicator, remember our good old trusty indicator right here, has been saying the dollar Canadian is incredibly overbought, and there's some reason at some point this is going to have to turn around pretty quickly. We have this nice rising wedge right here on the dollar CAD on the 4-hour chart. It broke out just over the last several hours. It's broken out here, with some nice reversal candles, and we're well on our way back to this 200 moving average area and potentially beyond. The 200 moving average is still about 100 pips away. There's still some activity to be had there, but we're not surprised that it's moving down. Oil rallied like crazy today, and the dollar CAD has turned around pretty strongly. And we've even got a pretty decent setup on the daily chart as well for the dollar CAD. So we're watching this rising wedge. We're going to see how it goes. We're going to see how things run while oil, we'll see how much oil turns around. We'll see how much it rallies. And the dollar Canadian is going to be going really good there. It's going to be going really, really good. So, that should be exciting. And Justin, are you the Justin that I know? I think. Nice to see you if you are. If not, still nice to see you. I think that hey Justin, nice to see you. I think that oil has some pretty good potential. I sent around an interesting article earlier this maybe yesterday or a couple days ago, and it was just kind of documenting some of the movements that we've seen in oil. When oil has gone down by about 50% or more in the past, and there's been several occasions that this has happened. The economy starts to boom, stocks start to boom, and oil typically rallies like crazy. So I think there's some pretty good possibilities there. Not to mention, oil is not going away anytime soon. It could definitely make a big run down, and it could definitely stay low for some time. That's absolutely possible because we've got the Iranian situation, and they're going to add a lot of oil to the existing supply, and all of these things are happening. But oil is still there, and it seems like I don't know. It seems like getting too much below the $30 mark on oil is starting to get kind of crazy, and that the powers that be are not going to allow that to happen. So I think that $40 mark is kind of a pretty solid area. Now, I could definitely be 1,000% wrong because I'm not specifically an oil trader, but I think that $40 mark has held oil pretty well, and it will probably continue to hold oil pretty well. We'll probably see things bounce around in mid to high 30s to the 50 to low 60 area for the next while, and kind of just see things bumping around in there. But there's some really interesting things that happen with oil, and I think that we could see a pretty big rally in the works. All right. Oil is going to $15. Okay, it could happen. It definitely could happen. All I know is here in lovely California, we're still paying a lot of money for gas, and oil's quite a bit cheaper than normal. But I know there's all the other reasons that are happening and so on. Okay, that's a little bit about the Canadian dollar and oil. I think oil's made a nice run today. I think if you're trading oil, looking for a little bit of a pullback and possibly getting long would not be the worst idea. But keep in mind, we're coming into the end of summer as well, and summer is a high oil demand kind of time, and things tend to kind of drop off a little bit post Labor Day. But we still have, huge countries with huge oil demands and so on. So, anyways, a lot of stuff to talk about with oil, a lot of stuff to talk about with China, just a lot of stuff. There's just a lot of crazy things going on. So to say the least, we're looking to short the dollar CAD down into about 130. I'd like to see it get a little bit above 132.00, and then I'll probably be shorting dollar CAD at that point and just taking that puppy right on down. I think that's going to be a great trade this week. For those trading the dollar yen, remember the dollar yen has a pretty big correlation with stock market activity, and if you look at the stock market in general, it's been wild and it's been totally crazy. But if you look at like the Dow, so yes, the Dow is down 100 points today. And if we look at there's a better chart to look at, of course, but if we look at kind of what it's done, it took a big dip recently, but the Dow's been just flat and kind of pretty uneventful all summer long. And then we had this little dip down in August, where we had those wild, 1,100 points up and down and all over the place. And the dollar yen tends to follow dollar yen tends to follow the stock market pretty well, and I think we might see some more choppiness on this dollar yen. We had that big wild stock market dip, and usually when we see kind of those big movements and a nice little retracement here, we're probably going to see some more choppiness on dollar yen. So just be careful if you are trading this one. Be careful. I don't really have a great sense of where I think the dollar yen is headed. I know that the dollar yen is very, very overextended to the upside, but it seems to kind of continue to want to head higher. So I'm just kind of being very, very careful there. But as we've talked about weekly charts, you can see the dollar yen has a very, very excellent weekly candlestick as well. Again, these cannot be ignored. Weekly hammers and weekly shooting stars, especially big pronounced ones, cannot be ignored. They just can't. You just can't ignore them. And so we have a huge candlestick right there on that dollar yen as well on the weekly chart. Again, big. This is a little 50 pip body and a 400, almost a 500 pip shadow or wick right here. And so that's an intense candlestick right there. That's something that tells me that I probably want to buy dollar yen on some pullback. So again, and it goes, pretty nicely. It goes pretty nicely in line with dollar strength that I'm looking for this week. I think we're going to see some dollar strength. So dollar yen can have some good opportunity. Euro dollar should have some good opportunity. I love euro yen. We've been talking about the euro yen, and I think this one's going to be a really, really exciting pair to trade this week. If the euro dollar continues to get hammered, the euro yen is going to be just cash money. We don't quite have the same type of weekly anythings on euro yen that we have on some of these other ones. In fact, our last week's candle was a huge weekly bearish engulfing candle. So that makes me, at least on the candlestick side of things, pretty bearish euro yen. Plus, we're breaking out of this little rising wedge right here, and we have a huge head and shoulders pattern. Anybody that's not familiar with price patterns and head and shoulders pattern, basically what this means is this type of a price pattern right here means that as we do what it's done right here, the chances of this euro yen pair continuing down and down and down and down is very high. And so I'm shorting. I'm placing a bet that the euro yen will go down this week, and we'll be trading that within the group and looking for euro yen bearish activity and looking to trade this short below 13600. And I think this is going to be a really huge, really excellent trade, euro yen. I also think pound yen is probably going to continue to get hammered this week as well. Huge bearish candles on pound yen. We're right back down to big price rejection right here. We've got some gaps to fill on this weekly chart. I think the pound yen is going to be a great short. The pound yen is very overextended as well. It made this huge run down and it's pulled back, and it's basically still a very, very nice bear flag on the daily chart. And so I'm looking for pound yen to get down into 180, and I'm pretty sure we're going to get there. And I'm going to be placing a bet that we're going to get down to 180 on pound yen. That's 600 pips away / a very, very small movement for this currency pair. This will be an excellent trade manager trade. Trade manager, once again, means if we use the additional settings on there, that if we're wrong, this will hedge us at a certain sequence that I've already got set into place. And whether we're wrong or right, as long as this moves big enough, we're going to get out with some profit. So I'm going to be getting short pound yen this week as well. Those are kind of the big ones that I'm looking at. I'm going to be following euro yen, pound yen, dollar CAD, euro dollar. So once again, I want to short euro dollar anywhere 50 to 75 pips higher than current market price, somewhere around 11300. I want to short euro dollar, and as long as it stays below 11400, I'm massively bearish. Above 11400, I'm changing my tune to a bullish picture once again because again, we have a 38% fib at 11800 that remains unhit, and there's a high probability of that getting hit still. So I'm keeping that in mind. But for the shorter term movement right now, below 11400, I'm bearish. Above 11400, I'm starting to get bullish again. I'm looking to trade down to 110 and then 108 and then parity is basically what I'm looking for. Pound dollar, I want to see the pound dollar retrace about 100 pips to 150 pips, 154.50 to 155.00, short it from there. If we don't get that retracement, then I just want to be short below 155.50, or excuse me, 153.50, below 153.50, and I want to see the pound dollar get down into 151.50 and then ultimately into 150. And I think that's going to be a pretty exciting little trade. I'd like to see the dollar CAD pull back about 50 to 75 pips, and I want to short it down into 130. Dollar CAD, that should be a great little trade. Dollar yen, we want to see a little bit of pullback, but remember, we've got some nice setups here. Big price rejection around that 118 area. I think it's going to be a good opportunity to buy some dips on this dollar yen and trade it potentially higher. And that one's going to be a little tricky because I want to be short euro yen and short pound yen after a little bit of pullback. So I'm going to be short euro yen and pound yen, and I'll be very, very cautiously trading the dollar yen. But I think we've got at least 5 or 6 currency pairs this week that are going to be super exciting, super great to trade. Oil should move well. I'm expecting lots of volatility in the stock market this week, just because that's probably what we're going to see, and that's going to be great. We're going to get lots of opportunities for big swings, and that'll be perfect for our trade manager, and lots of good stuff there. So that's what I'm looking at. I'm going to send out lots of charts this week and lots of kind of trades of the day in the email or chart of the day. The specific trade entries and exits and so on, I will reserve for group members and for what we do in the live group, but I'll share with everybody the charts and things that we're looking at, and we'll take it from there. So let's talk about your questions. I see a bunch of comments that have been typed in here. Let me just make sure I haven't missed anybody's questions or comments. And please, if you have any questions or any currency pairs you want to bring up or any comments you want to bring up, go for it. Let's talk about it right now. Let me get this video posted and we'll talk about everyone's questions. Make sure we have everything covered.